Good morning, everyone. Can everyone hear me? Type yes if y'all can hear me. Is the music too loud? Music good? I just want to make sure the music doesn't interfere with what I'm trying to say here. Great. How about the picture quality? Is picture quality good? Can't really see it too well on my end. Aerosmith. See, we got a bunch of rockers in the house here. It's a little blurry for you, Tim. Well, that's a shame. Don't really know how I can fix that. Okay, I'm going to disconnect from the live stream for a minute, and I'm going to play with some settings for a couple of minutes and then see if that makes it better. Oh, I see. I guess I won't have to do that. Click on the little wheel and try that out. Great, yeah, because I set it for the highest quality video. Okay, great. So we don't have to disconnect. All right. So let's get down to a little bit of business. I know it's way early. I usually don't do any analysis this early because things could change a little bit by the open. But let's see what we have here. Got my live account. Going to be trading 12 contracts today. Got my ATM strategy, which is the Dow. And it's basically just a 40 and 40 take profit and stop loss default. So when I get into the trade, it can pop on my screen and then I adjust things to wherever they need to be adjusted to. Overall, we see that this market was climbing all of yesterday and even into the early hours of the overnight time for me here in the US. And the market produced a very deep correction, almost at 100%, and then a lower high and a new structure low. So our expectation now is a lower high and a new structure low. Now price kind of achieved that new structure low already. We had a lower close. But right now it looks like price isn't done dropping yet and is looking to produce another move here in the short-term order flow into a new structure low as well. So I want to start in identifying some of the zones that we're particularly interested in today for our support and resistance. And we see we have a clear point here, a clear point here, and a clear point here where price just had difficulty climbing past that until price broke through last night, and then we pulled down below it, we went back above it, and then we pulled back below it, and then when we revisited it, found resistance there and it's trying to drop. So let's identify that zone as a area of interest for us. Let's extend that out a little bit further. It's a little thicker than I would want it to be, but we have to kind of include some of this stuff here, and this and this and this. It's important. So let's identify that. Let's identify an area down here that price has been trying to stretch things down a little bit. Let's see. Yeah, we have a nice little area here that we can identify as well. Let's see here. Just grab the best little area here. See how price reacts to that, and we definitely have something up here. So that's about it for right now. That's all we can work with. Let me make the chart a little bit fatter. so we can see things. And let's talk about some of the things that we've already talked about, since we have some time to kill before the market opens. And we have an increase in momentum here, very deep correction, price found in mid-range pullback. So we would expect for the new structure low to be a pretty decent one from the order flow perspective, and price achieved that nicely. And every attempt to come in where the bulls tried to come in, they didn't find much support or follow through, so price kept dropping, came back into this little zone here, and then price tried to find some support, found some stronger support, price rolled over again, and we seem to have much stronger selling than we do buying. So our bias for right now and for the market open is for price to continue to drop. So we're going to wait till the market opens. We're going to see what some of those resting orders are. Resting orders is, remember, people like trade on the New York Stock Exchange floor, and the some of the E-Trade and Scotts-Trade and some of these things, you know, they make up a pretty large amount of people, and they can't trade pre-market or aftermarket hours. So some of these traders place some orders there, buy orders or sell orders, or just get out of the market orders to take profit or what have you, and you know, they accumulate and they just sit there resting for the market to open so they can, you know, come in. And that's why you see that surge of kind of looks like a little news event. You'll see it, and I like to see where that takes price initially before I get too involved into looking for that trading opportunity. So having said that, here we can come in and price made a correction into an area of structure, okay, and then the sellers came in, and we had that 8:15 news release of non-farms ADP. I don't know what that is really. It doesn't really matter. And then price eventually continue on downward to fulfill its expectation. Now we have some crude oil inventories that come out at around 10 o'clock, so we expect a little bit of volatility then, so we'll keep that in mind in case we're in our trade to adjust it from a trade management standpoint. That's my only position on news, is that it's going to create some volatility into the market. I don't try to interpret it, I don't try to trade it, because what may be good news for me is not good news for someone else, and it's all about how that news makes them feel from a fear or greed standpoint as to how they're going to react to it. Plus, different sectors or different institutions have different agendas and trade the news how they see fit. So I don't get involved in that. I don't try to follow the fundamentals. There's too many sources out there, and quite frankly, it becomes very difficult to find out a source that is credible and that you could trade with any high degree of consistent probability. You may have a few runs where you'll do well, but in the end, it's a flip of a coin, as news events are also weapons of mass destructions for the small traders when the institutions try to load up or fill the large orders by taking the smaller fish out of the sea. Okay, that's my take on news, and I don't trade it. I don't really care for it. I just like to know when the volatility is going to enter the market. From a trade management standpoint, I think it makes sense and worth keeping an eye on. We're seeing the prices having difficulty right now getting past this area here. We'll see if it holds some support and allows price to climb up a little bit. Doesn't look like that's going to happen. If it does climb, it may not climb much. So price should not be hanging around here. Price doesn't usually hang around in a support area when it's going to find support. As you can see, it moves. As you can see, it moves. Same way with resistance. Price gets to a resistance point, comes down. Gets to a resistance point, come down. So price does not like to hang around in support and resistance areas. And when price does hang around in support and resistance area for an extended period of time, that area has a high tendency of failing and price getting past it. As you can see, that is what price is trying to do now. So one of the things that we want to see in areas of support or resistance is swift action and swift decision making. because that's what's happened in the past, and that's why we've identified the zone. So once you get price get there and it starts not being very active in this zone, that's a zone that has a high probability of failing. And if you do get long for whatever reason in this area, and you'll see this, it's an indication that you may want to manage your trade more aggressively. Price gets in favor, try to get to a break-even position as quickly as possible. Okay, is the audio and everything coming through okay? Still? Just want to make sure there's no lag between the video and the audio. Okay, great. All right, I can see your questions. I can see your post. So if you ask a question, I will occasionally glance and answer it. I'm just not going to type it because it's just too distracting and time consuming. Plus I'm a two-finger typer. All right. So we would expect this area to fail at some point. Some minor support may come in. We see we have a little bit of a area here. That price found support, found resistance, try to find support, came back. So we have a little area here of short-term support and resistance that price may find some support to, and then roll over and produce that new structure low. From an expectation standpoint, we do expect a one-to-one move always until price either falls short of it or extends past it, and then we adjust. So we copy that and paste it. We see that we're just shy, a little bit short of it, and we can go ahead and see what something like that would look like. We're trying to find some of that support in this area that we've been trying to find. We see there is buying interest, and there has been some rotation as well. We're going to cover rotation more when we get into the actual trading opportunities, so that you can be clear on rotation. But right here we have a candle that did not trade lower than its open. It took away 50% of the previous candle, so this is a good, solid, not complete rotation, but this is a good invitation, a good place to enter this long. A decision candle is a candle that closes above the previous candle, kind of like an engulfing candle. Okay, like this right here, this situation here, this was a decision candle. Okay, a awesome rotation candle to the downside as price hardly traded above the open of the previous candle, completely engulfed and closed below 100%, no rejection at all. This is a great short signal. It just doesn't happen in an area that would make sense to take that short, because you're right in the middle of an area that has provided support. Okay, so that's why price is kind of farting around right now, not really going anywhere, because the masses are confused. We have a balanced market. When you see price doesn't go anywhere, there's no imbalance. Price is completely balanced between the buyers and the sellers, and they're duking it out. Once imbalance comes in, that's where price movement occurs. You got to have imbalance, one side buying more than the other, or selling more than the other, or trying to buy, so that we can have enough imbalance to make price move. As long as price is here, we have a balanced market, pretty much. It's at the 127 extension of the first swing down, first white line. Okay, of this. Yeah, I haven't drawn any ratios yet. I don't trade corrections. I don't trade corrections hardly ever, only when I'm expecting or I have enough breakdown in price. So I don't trade any corrections for the reasons that it's just a correction. It may be a shallow, maybe deep. We don't know exactly. We have an expectation as to what kind of a correction we should get. And if I were to trade one, I would trade one only where my expectation was a deep correction or possible failure to trade a counter order flow trade. Okay, so you can see that for the most part, just trading the order flow is extremely powerful. Here you had an indication that price may fail on that new structure high because of the strength and because of the 100% correction almost. So then once that happened, price made a new structure low. The expectation was a pullback to an area of structure, which we got, and then price went ahead and has fulfilled so far the expectation, although I would expect it to get further down. Okay, so we have about 10 minutes left before the market opens. We're going to just hang tight. I'll be happy to answer any questions that you might have. What time do you have? Just to check delay. Oh, I have right now we are at 9:19:52 market time. What is basically a head and shoulders pattern, right? Oh, that is basically a head and shoulders pattern, right? Over here, yeah, you have one shoulder, and the head up here. You know, those are all retail ways of processing charts, because you know people like to trade this at the break down here. Well, you should have been thinking about getting short somewhere in here in one of the shoulders as opposed to down here. Gives you a better risk reward. Nonetheless, those are all double tops and head and shoulders, or more on the retail side of trading, where you start getting more on the wholesale side when you start trading the patterns that Scott Carney developed, which are the bats, the crab, the deep crab. All those patterns get you more on the wholesale side of things. But any pattern that you decide, or any type of setup that you decide to trade, if you're not processing the chart appropriately and you're not in tune with what's happening from a strength and weakness standpoint, then to some extent you're trading those setups blindly without having a complete understanding whether that particular setup at that particular time and space has a high probability of succeeding or failing. Okay, so it's important to understand what's happening, where that pattern is, how it fits into the context and the expectation of what the order flow and price action is telling you, so that you can understand, yes, it is a pattern, yes, it does comply with its ratio alignments and all that other good stuff, but because it is completely against the expectation, then if I do take it, I need to manage it aggressively. If it is in line with the expectation, then I can take it and be a little more relaxed with the way I decide to manage that trade. Give it a little more room. Does that make sense to you guys? No, I know, RJ. I know you're not suggesting going long. Let's see, when I move my mouse this way, it takes a good while before it actually moves on the screen. That's why I asked if you guys notice any delays or whatnot. I do want to mention that I am going to be trading live on my live account. I do want to caution you guys, if you want to take the same trades I do, that what I'm doing here is for educational purposes. and I am trading capital that I can afford to lose, and that I am not guaranteeing to you guys that my trading today will result in any kind of profitability. I could have a losing trade. I do not recommend that you take the trades I take, but that you try to learn from the experience and how we process the information, how we take entries, and how we manage the trade, so that you guys can have an experience of putting all this together. Okay? I am not advocating you guys trading or taking, the same trades I take. Yes, this kind of system this isn't a price action system, so it's going to work on any pair, on any instrument that has any kind of price movement, because what you're doing is you're assessing the order flow and the price action of that particular instrument and that particular time frame. So it doesn't really matter whether you trade oil, gold, foreign exchange, Cocoa Puffs, marshmallows. It doesn't matter. The information is read the same, processed the same. Okay, I've given myself some advantages with it. Let me see what time it is here. Okay, 9:25. I've given myself some advantages with the tick charts because it's a truer representation of true price action. So it helps me assess the strength and weakness a little better. The time-based charts have more of an emotional component to them. But can the information be read the same way? Absolutely, it can. It doesn't matter how you look at it. Okay, when it starts becoming less and less important, not important, but less and less valid, is when you start using things like Hakenashi or Renko charts or things along those lines, where the price is actually weighted or filtered to produce that candle. That dilutes it a little bit and gives it a little bit of a less quality, but you can see the highs and lows and you can make expectations. It's just hard from a bar by bar perspective to time your entries from a bar by bar perspective. Yeah, the 233 tick chart is close to a 5-minute chart. It's a great intraday time frame. If you're trading intraday, you really don't have any business being above anything that's 10 minutes. If you're a swing trader intraday, just regular swing trader, where you're going to be in trades for hours to a couple of days or a few days, you don't have any business being on a 5-minute chart. You should be somewhere between the 15-minute and the 1-hour chart, and vice versa. Are you going to touch upon money management at all? I am reading through the Ryan Jones book at the moment, which I think you posted an expert from a while back. I did not post that book. Don't know who did. I did not post that. I am going to be speaking about money management probably here next week. We're going to talk about smooth ratio money management, and I'm going to show you guys how that works, and I'm going to provide you guys with a updated spreadsheet to help you plan your money management. But from a basic guideline standpoint, if you're trading Forex, you should be, for every $10,000, you should be trading one lot, and half lot for every $5,000, and break it down quarterly from there, just as a basic guideline, to give you a good margin to work with. But we're gonna make it more detailed with the smooth ratio money management, as it really helps you work and build your account quicker, and helps you recover quicker as well. I'm just not going to touch on it today, because I'd rather focus on the price action and the trading. So we got 2 minutes till blast off. I am using structure analysis the way Damian taught us on the H4 chart on Forex pairs, and I'm already getting confident reading price action. Thanks. You're welcome. I don't remember posting that the trading game. Maybe I did a long time ago, but let's see. Do you trade higher time frames? I used to. I used to trade the 1 hour time frame, but it became way too slow for me, and I fell in love with intraday trading. Are you recording this video so that we can? I think YouTube says that they record it automatically and post it, and it's available for, I think, a day. I'm gonna find a way. I think there's a way of saving it permanently. I'm gonna try to do that. Okay. All right. So we have about half a minute here before those orders get filled and makes price move somewhere. See how many people are in here. 51 people. There's 51 of you guys here. Okay, market's about to open. And market's open. See what happens. We should start seeing candles print much quicker now. We have the tick counter down here. It's the only indicator I use besides price. We're going to draw a fib of this high, this potential low here. If price extends, then we're going to extend the fib until we get a decent correction. We had a rotation candle here, so this is a great invitation for the buyers to come in. And if I were looking for longs, this is where I will be looking to enter long. In this particular situation, I'm not looking for a long, as I will be trading a possible correction in an area where the bulls have tried to come in with strength and have not been able to. Any correction that we get here, although from an order flow perspective should be deep, it's not one worth the risk. Okay, so we're going to see what happens here. Can make things a little fatter and make them easier for you to see. We hit the 382. We're starting to see a little bit of weakness here, some indecision. Back-to-back candles, some selling pressure coming into the market. I do not want to take this short, as I am trading right back into this area here. That doesn't give me room to protect my trade. Okay, but this is the area where you will look for that short in the expectation of that new structure low. Like I said though, this is an area of support and doesn't give your trade much room. So we're going to be patient. We're going to let price do its thing and see how price reacts to this area up here. Expectation is for price to make a new structure low. It cannot be anything other than that at the moment. We're going to be trailing our trades with a system that one of my students, who has turned out to be an amazing trader himself, Antonio, designed. Great vision and amazing way to understand price and swings. Came up with a really nice trailing system that I showed you guys in the trade management video. We're going to be using that today to trail with. And the importance of trailing is to maximize the efficiency of our trade, to try to capture as much of that move as possible. But it's a delicate balance between giving your trade enough room, okay, and not giving too much back. and Antonio's found a really nice and efficient way of doing that. So big thanks to him. I believe he's watching. Again, this is as we see here, price shouldn't climb too much further. So we see a lot of selling pressure in the bulls, pretty weak. However, I do not want to take that in this area of support. But we're starting to see that balance of power between buying and selling becoming stronger on the selling side than on the buying. There's buying interest, but there's selling pressure that's stronger than the buying interest. And as such, price should drop. Now, we don't need any volume indicators. We don't need anything, any RSIs or anything to see that, because the information is as simple as the candles that are on the chart. Okay? And price should make that new structure low. But sometimes price is in an area where risk reward becomes an issue as far as taking the trade, because we're in an area of pretty good, where price has attempted repeatedly to find support. So trading right into that area is not the smartest thing to do. Sometimes it's a good idea to just let things clear that area before better decisions can be made. Okay? Does the trading strategy take into account stop hunting? You know, ideally you want to have your trades above structure areas. Stop hunting is going to occur in areas where these blue lines are identified, because that's the area where price found very strong support or resistance, and those are the areas that get revisited. And so to answer your question, I don't really consider that. I want my stop to be above or below where I believe I'm wrong and where price should not be trading if my analysis is correct. I'd rather take that hit and reposition myself than to worry about who may or may not be trying to stop hunt me. Does that make sense? Now ultimately, we're not changing our expectation here, even though price has failed to make that new structure low, has made a short-term new structure high. For us to change our expectation, price will have to close above this area. This is the clear high, this is the clear low. We're in a complex corrective process here where price may or should find some deeper correction here. So what we're going to do is we're going to try to identify where that would be, and we'll see how price reacts to this area here. We see that we have an increase in volume on the buying and some increase in momentum as well. So it'll be interesting to see will those sellers try to come into the market. I'm going to be getting short here soon. Not 100% happy here. I do have a little more room to get to a break even. I do expect a new structure low. My stop is above this swing high here. So we'll see how the bears react. I'm still trading pretty close to an area of support, but my expectation is a new structure low, and that expectation plays out over 70% of the time. The expectation here is pretty clear. We've had major weakness on the bulls coming up, with the exception of this last push, so we'll see. at the test of this structure area down here, I will seek a break-even position, and we're going to be extending our profit targets, hopefully. We're going to extend this down here. We tested structure. We're going to get to a break-even, just in case. Let me get my other account up to a break-even. That's what happens when sometimes you don't get enough room and price does find that support. But at the very least, what you're doing is you're protecting your trade, you're protecting your capital, as this is a support area and price may find that support. Let's see if the bears can get their act together and push through. This is a huge decision candle and rotation to the upside. Let's see what ends up happening. I'm going to be taken out soon here. Let's see if we survive. Come on, Bears. It's okay to cheer and curse at them. Oh, my other account got taken out. Let's see if this one survives. Cool. Enjoy the show, guys. Okay, thanks. Let me read some of this while I glance with one eyeball at my trade. Just checking from the work briefly. Are these live chats available to watch later? I think so. I'm gonna do everything I can in my power and skill to make sure that they're available later. If we may not survive this, huh? Yeah, I got taken out. Made $120. We'll see how price materializes here. See how we can reposition ourselves if possible. Price is really having a hard time making that new structure low, and volume is increasing. So we may be trying to get price rotation here back to the upside. So we're going to be patient here. And we're not going to be too aggressive to take anything short in this area, as I tried it once and ended up with a break even. That's why we protect our trade here at the test of structure, because price can always find support here. It's been trying to do it all, since 7 o'clock this morning. So it's important to not take the trade down here, but when you do have an opportunity to take it, as long as you have room to protect your trade. In this particular situation, wasn't a whole lot of room, but a break even is a winning trade. If we expect a deep correction and we got a shallow one, do we still take the trade? If there's enough breakdown in the order flow and you're seeing the rotation that you want to see, I don't see why not. Just understand that you need to give your trade that much room, or enter with a partial position size, and then if price gets deeper on you, you can scale in another entry into a full position and then average in a better price. I would definitely not enter with a full position to then add another full position, because now you're just adding to a potential losing trade. Okay. So we just got to be patient. This is a complex area, a tough area to make decisions in. Okay, we made one and ended up starting to be profitable, and then price turned against us. So we need to be mindful of that. And if we get a rotation candle here, this is not a great place to find that entry short. This is an expectation now that has serious I guess considerations for it to fail would be the words that I'm looking for here. So it requires a lot of patience sometimes to wait for price to speak to us in a more clear fashion as to what its intention is and what it wants to do. Our expectation is still overall for a new structural low, but those expectations have considerably weakened after 2 attempts that have not been able to produce that new structural low. So now it would be important for the bulls to make a close above this to establish some sort of dominance over the bears, and it's important for the bears to prevent the bulls from doing that. So there's a pretty strong battle here between the bulls and the bears, as one's trying to close above this point and the other's trying to prevent that from happening. Okay, so it's important to understand that context of what needs to happen, who needs to prevent what if price is going to change. And we see weakness here. We see candles getting smaller and smaller and smaller. That doesn't mean that we're going to get rotation and that it's worth taking the trade to the downside. It just means that that's the evidence of that battle between the buyers and the sellers right now, as to each one's trying to yes, it is a complex correction right now. The background music is relaxing. Yeah, it's always nice too. I think trading is intense enough, so if you have something that can sort of make things a little more mellow in the background, it's always a nice thing. I listen to all kinds of music, except for that heavy metal rock. Please don't take offense to it. It's just way too intense. So I do see the issues with climbing. I do have my expectation of new structural low, a weakening expectation. That puts me at a slightly lower probability trading opportunity to look for that short. So if I do decide to take that short, I will want my risk reward to be better, so I will look for something higher up. Selling pressure coming into the market, but the buyers are still here. They're still trying to buy, as we can see. Oof. This is way too expensive to enter. Plus I would want to see the candle close in this particular case. We still have some buying interest here, some buying pressure, as they were able to push back the bears, but this is the first real good attempt on the bears to try to reestablish dominance. My expectation on this candle to be a small bearish candle. We'll see what it produces. It should definitely stay probably within the bodies of this high and low. We'll see. But they see pretty strong selling interest here. That's a nice thing to see. And we got that neutral candle within the body of this that we expected to see. I expected it to be bearish, but when you look at this indecision candle, it's more bearish than it is bullish. There was more rejection on the buying side than there was on the selling side. So I don't particularly want to take the short here. I'd like it to be slightly higher, as it did see selling interest, some selling strength, but I didn't see any follow through. That's troubling for me in an area of possible support. So I'm going to be cautious about any short I decide to take, as the bears might have checked out of this one. Not 100% sure. There's still a lot of selling pressure here, but selling pressure is just that, selling pressure. This has a higher chance of moving higher right now than it does moving lower. So being the smart traders that we are, we're going to be on the sidelines here for a little bit and see if price speaks to us more directly, or if price moves out of this area, whichever comes first. We have a small round number here, 6,800. Price hasn't really respected it too clearly, as the price has gone above and below it 20 points in either direction, so not putting too much strength on this psychological area here. As you can see, I did trade against that. Looks like price cannot climb and cannot drop. Right now, what would be the expectation? A new structure low on the long term and the short term, as we have produced a lower high. So we have short term and long term hinting to us that price should create a new structure low. But again, not giving too much room to my trade to work out. When I get a proper rotation candle, price is slowly drifting downward. And this is the rotation candle that we're talking about. This will be the shorting signal. However, I'm trading right into support. So even though my expectations are for a new structure low on the short term and the long term, it doesn't make sense for me to take that short here. This lower high would be have to be taken out. I'll draw a line on it. This is the lower high from the order flow that we're looking at. So until that is taken out, our expectation is for a new structure low. After all, if you look at this from a momentum standpoint, this is just one very weak correction to the upside. So, but price is having difficulty getting past this demand zone, and as price is there, it just makes it very difficult for me to take that short. Had I survived this entry, then we would be looking pretty good right now, but I didn't survive, and it's not worth me chasing price and getting a worse fill into an area where price is finding support. If we retrace more in order to have room to protect our short, wouldn't we be starting to think to go long? I wouldn't be thinking of going long until price makes a bigger attack on this area right here, which would invalidate the expectation. Okay, price is still showing major weakness, but the expectation is clear. Price has aligned itself with short-term and long-term expectation. So unfortunately, we got taken out here on a need to protect my trade situation. But as you can see, the expectation and our analysis and our reading was 100% correct. We just couldn't take the risk of trading into such an area that proved to be pretty dominant when it came to finding some support or demand there. Okay, but this trade would have worked out very nicely. But we can't get upset or beat up because the trade didn't work out, and now when the trade is doing what it's supposed to be doing to enter down here, that just creates a very poor risk reward and very retail way of trading, and you're doing nothing more than chasing after a particular trade, kind of like what the indicators do. They have you chasing everything and predicting nothing. I don't think that the market is going to go up until the expectation fails. Okay, now we have a possible corrective point here. Okay, this is an invitation to buy and rotation. So we have a area here where price may want to correct. Where is it going to correct to? Possibly somewhere in this general area. So now we may have an opportunity to enter the market on a good rotation if price does not get into this too much. So I'm going to draw a fib here. we're going to see what price does. Okay, as price moved away from the area of complexity, it should find that all of these people that were uncommitted and undecided around here should be with a clear frame of mind to decide what they want to do. So what I would want to see is a pullback into this general area here and get a nice rotation back to the downside. Okay, we had a not too significant new structure low on decent volume, so we may get a mid-range pullback. So I'm going to look for a pullback somewhere in this general area here, and if we get some rotation to the downside, it may be a trade worth taking. One of the things that I would want to do is to come down here and say, okay, well, where's my next level of support? My next level of support is down here. I don't have anything else. Okay, so I'm just going to draw a little line there. Oh, let me just draw a horizontal line. Okay, and this is a particular situation. Had we still been in this trade, we would have been gone here. Our stop right now would be above this. Sorry guys, the stop would definitely be above this area here. Would have locked in some really nice profit. As you can see, we identified this area as an area of possible support, and what is price trying to do? Find support. Okay, finding some really good rotation here. So let's see what price does as this produce another rotation candle, another invitation to buy. This is why we don't chase completion points. This is why we don't chase possible corrections, because price is dropping. You're trying to stop at this point a falling knife. So what you want to do, just let price correct. You don't have to trade every single swing. Take the ones that have higher probability of working out. Now this particular trade would have had us up right now about 40 points, which would have been nice, considering I'm down 90 between yesterday and the day before. So last month was really nice and profitable. This month I'm down 40 since yesterday was the first. So for the month I'm down 40 points, which is crap, it's nothing. But we definitely don't want to take trades that are not high probability. So let's wait for that correction. Let's wait for that decision to be made, and then we'll get on. We usually get between 2 and 3 opportunities per session. I hope I can, we already had one, just turned out to be a break even. Unfortunately, we got taken out by a few points. Price would have moved nicely in favor. But we may sit here for the rest of the session and not end up taking anything. And if that happens, we'll have another one of these for sure. Because I do want you guys to see more entries, and I want you guys to see more trade management. We do have some short-term harmonics here at play also. Okay, so obviously after one-to-one moves, those are our expectations. We should find some sort of corrective process or an attempt to correct at the end of a one-to-one, which is what we're seeing now. Maybe we can realign ourselves into a short somewhere around 790. That gives me room to protect my trade on a retest of this level here with an expectation of a new structural low. So my expectation would be for price to get past this area. So I want to see a generalized weak correction into an area of structure, which we have here, and then we get a nice rotation candle to help us look for that short. Okay. Now price found some pretty good support off of this level last time. So we got to be cautious. Got to be cautious. The difference is, look at how we approached it last time and look how we're approaching it this time. Okay? Significantly different. I would hate to take this rotation candle here if it ends up being a rotation candle. No, it's not. It's an invitation, weak invitation candle. Now we're getting into a better area to look for that short because it makes the risk reward a little better. We're seeing some of that selling pressure enter the market, but no rotation yet, no decision yet. We got to be patient. And this is an ongoing process. It's an ongoing process, and it becomes a little more intense from a trade management standpoint, even though you didn't notice it, because the rules are clear. Once you get to a structure area, you remove risk. If you don't have space, well, then you reduce your risk to just above the swing that you entered. Okay, and this is a great rotation candle, but what am I trading into? Area of support. Can't do it. Don't have room. Some days you're just going to be like that. Okay, and this is why we don't take trades, because look at this candle. That would not be something that you would expect from a bar by bar, to have this candle and then have the bull still trying to buy around here. I think that statistics on the average points per month, that's going to vary significantly between trader to trader. So, you know, I know people get hung up on stats and things of that nature, and I don't think that's the best way to look at anything, because my results are my results, your results are going to be your results. We have different emotional tolerances for trades and what we allow a trade to do. So therefore, you looking at someone else's stats only tells you whether that person's a good trader or not. It does not tell you that you're going to have the same results. I can give two people the same exact simple moving average crossover, and they're both going to have clearly different outcomes. Okay? I think what you need to concentrate on is becoming consistently profitable on a daily basis. When you average all your losses and all your wins on a monthly basis, that number becomes a positive number. Once you can do that consistently, you will be a profitable trader, and you will have joined the top 10%. Okay? And you can take any account and grow it to whatever limits you want with the right money management formula. But if you can be 10 points consistently profitable, then you can make all the money you want in this business. The key is being profitable on a daily basis. Now, that doesn't mean that every day you're going to have a winning day, because I'm consistently profitable on a daily basis. However, yesterday and the day before I had losing days. But when you average it out, there's about 20 trading days in a month. When you average it out, you know how many points you make on at the end of the month, and you divide it by 20, that has to be a positive number. Okay, and once you can do that consistently for a few months, you can call yourself a profitable trader. What you can do is, when you have a couple of losing days, feel like you need to make all kinds of changes and change everything around, because now you just opened the can of worms that's going to blow your account. I'm looking for the short. However, I don't like this little bit of volume increase here. It is definitely a nice short to take. And this is becoming a little too expensive. All right, I'll bite. Stop takes me above this area, above these swings. Let's see what ends up happening. I do have nice rotation. I am reacting to this area of structure very nicely. Let's see if we can continue. This trade is not fantastic. But we'll see. Don't like this candle. Expectation is a new structure low. Let's see which ones of these are still in play. This one. We can erase all these up here. Okay. Line in the sand for this, we have the lower new structure low here. We have the correction here. And then we have a little bit of complexity still here, and then that new structure low. So we would expect price to make another new structure low. Price react may want to come back to this small round number here and test it. Right now I'm down 10 points. Not happy that price hasn't followed through. But we're in this trade now, we just gotta manage it. It is what it is. Then you're saying white structure, possible reversal to the upside. Yeah, that could be the case. But our expectation is a new structure low. We have price rotation. Let's see what ends up happening here. Right now we're down 14 points, 15 points. Not particularly happy about that, but I'm not stressing it. It is what it is. We manage our trades, we make decisions, take action. Ugly. Very ugly. We need the bears to come in here. We had to close above the 78.6. Terrible. This is a trade that I may very well lose. And another day trying to play catch up. Let's see what happens. The bears have failed to stop the bulls in the area where we would expect it of them to do that, which is somewhere around here. Let's see if we can get a strong decision here and for the bears to turn it on again to get me out of trouble. This is pretty much the line in the sand. My stop is above the line in the sand. Now this second swing up happened on even greater momentum and projection in the short term, which sucks for my trade. So if this trade ever comes back in favor, I'm looking more for a graceful exit than I am anything else, because now my expectation of the new structure low has become an almost unreasonable expectation. So I'm still alive here, barely, and what I need to do is find a way to protect my capital by trying to take a graceful exit. Is it advised to move my take profit back to break even, as price was not supposed to retrace so deep? If it is stopped out, means we will change to long. Quite possibly. We have to see what price achieves. If I get stopped out, price would have achieved a new structure high, and yes, we will be looking for longs. So this is an example where we didn't read things wrong. We could have made a bunch of assumptions that because it's a support area, that price was going to, move higher, but that wasn't the expectation. Okay? And trading the probabilities is what keeps us profitable long term. You're going to get into short-term periods of, drawdown, but in the long run, you're going to come out way ahead on the profitability side. Okay, because we trade the expectancy of that 70%. Now that expectancy for me in the last couple of days has not been great, but that's okay. I understand that I'm only a trade or two away from erasing these last 2 days. And I just need to be patient with the analysis, patient with my process, and with the price action, and just keep trading the expectation. Because the expectation plays out more than it doesn't. Let's see if I survive this. And if I don't, I don't. Alright, that's that. Down $2,200 for the day. The market has clearly spoken now and wants to head higher. So what I need to do now is reposition myself to look for longs. I'm going to take this out. Price is going to revisit this area. Get rid of this, get rid of this, get rid of this, get rid of all these lines. Now we're going to draw a fib here, and we're going to wait for a correction. Now we don't expect, based on this, a very deep correction. However, we could expect something complex because we had what? A break in expectation. We now have a new structure high. So usually the first correction ends up being deep and complex. But based on this volume here, we would not expect that at all. We're going to let price do its thing. And our goal here is to find a long that's going to help us join the market's newfound strength. Yes, it will be uploaded. Well, we didn't get a chance to enter there. Let's see. definitely want to see a correction that's pretty clear. We do not want to chase something because a candle tells us something. Alright, looks like we're trying to correct here. This is a good area here, even though it's not to the 382, to try to find that long and get a nice rotation candle as price reacted very nicely here. We have some structure here. Yeah, you bet. I mean, things don't always go good, you know. Most of the time they do, but we all have periods of where things just don't seem to be progressing. But that's when you need to stick to your roots even stronger and continue to take the trades. You know, apply money management. You're only a short couple of trades away from erasing the ugliness. You know, in this particular case, it would have been a very profitable trade. In this particular case, it wasn't, but we followed our expectation. We followed a logical step that's in line with our trade plan. It didn't work out. That's going to happen. No sense to get all crazy and start pulling hairs from your head and, you know, finding the tallest bridge in your town. Yeah, crude inventory should have been out already. I think it comes out at 10, right? Or is it 10:30? $10:30, 15 minutes. We're going to go ahead and buy here. Doesn't give me much room, but see if we can get price to come down a little bit. Yeah, I think I'm going to hold off a little bit. One of the reasons why I held off, because the rotation was expensive, and I told you guys earlier that usually on a new expectation failure, we usually get priced to make a deeper correction, or maybe a complex one. So my lovely wife brought me some orange slices. I think she's trying to tell me I need some vitamin C in me. No, she's great. She's very supportive. All right, come on. Looks like things may slow down a little bit here before the news. I agree, Argent. I think it's going to get down to the 50 to the 618. There's good structure there. I would feel good about buying you the 618. Still have some selling pressure here. Still have some we have some buying interest, but the sellers were a little bit stronger than the buyers as they were able to push them back. We have 7 minutes till news. News can go either way, so we'll see. If we end up being on the sidelines or into a trade. Sorry that the market's been kind of in this rut here, in this area. But we need to exercise patience sometimes and not get frustrated. Maintain composure. We did not get a new structure high. Well, yes, we did. I'm sorry. We broke here. We did get a new structure high. Our expectation is for a deep correction and a new structure high. I am not liking this much strength coming back down. We're in the golden zone in an area of structure, so we would expect the bulls to try to do something around here. Yeah, the background music is Spanish guitar. I don't play guitar, but I like to listen to it. Ooh. Interesting. 3 minutes before news. Yeah, it's YouTube. It's called 3 hours of relaxing guitar music, meditation, study, calming, stuff. Decisions. I'm gonna pass up on this, even if this candle closes strong. Don't like the strength. News is going to be coming out in 2 minutes. May not give me this could be something simple as these shorts taking profit and holding before news. But this will be the area that we would expect the buyers to come in and make that new structure high. I will. I'll tell her thanks. Well, I'm hoping I can get out of the hole for at least today. I'm put a dent in the last couple of days. I'm down now 40 yesterday, 40 today for the month, or maybe not quite 40. We took a point or two here, so down close to 80 points for the month. Not fun. Not fun. The last 3 days have been pretty bad trading for me, but I feel like I've been following my rules. I've been following my process. Just haven't been on the successful end of things, which is fine. Wow, that moved things, huh? All right, new structure low. Too bad I got taken out here. It looks like I had the overall intentions correct. Oh well. Sometimes it happens like that. Now it's time to realign ourselves again. I'm going to sell here. I know price did not come back into the 382. There was a lot of strength and momentum here. We came back to an area of immediate structure, and we had great rotation to the downside. So it's an aggressive entry, but one that makes sense to me. So we can capitalize on this one, and this one can give us what we're looking for. I'm looking for at least 40. Let's go, Bears. Produce. Come on, Bears. Keep working. Let's draw a little fib here. See what ends up happening. Come on, Bears. Keep it coming. Could we be this unlucky? We want this area to definitely hold. I'm going to remove this. Want this area to definitely hold here. Look at all this strength. I know that the second half of it was inspired by news, but we should understand that the bears definitely want to take price lower, and we have to see what ends up happening here. Let me erase this. Let me draw my fib here. From a trade management standpoint, we got to the 382. So let's see what we can expect. A 1-to-1 to the downside would give us a 1618. Somewhere around here. Let's see. Let's show price what it needs to do. My fill on both accounts were, my other account got a slightly better fill by a couple of points. Come on, Bears. Fulfill your duty and expectation. Let's go. I understand this trade was slightly, to some extent, impulsive, but I got a great reaction to an area of immediate structure in this place where price was moving really quickly to the downside. So increase the risk, shorten the potential reward, but given the information that I had, I took the decision. Now we're getting a really nice candle here. Hopefully it closes monstrous like this, and it pushes, stimulates the next wrath from the bears. Really nice candle. Major decision candle. I like to get funny sometimes. Let's move the door over so I can get through. Yeah, technically structure should go above structure high, but in this particular case, there's no way I'm going to risk that much. It is what it is. Technically, it should go at least above the 78.6, but look at this swing. Am I prepared to take that kind of a hit? No, I'm not. I mean, I'm trading 12 contracts. If I was trading one contract, then I don't believe any trade should go against you more than 40 points. In this particular case, it would be like 60 points. So let's see if the bears here can continue their intent to sell. That would be nice. Sorry if you hear some weird noises. I'm kind of destroying the orange my beautiful wife gave me. Without question, our expectation here should be a new structural low. Without question, the bears seem motivated enough to want to achieve that. Without question, they should be strong enough to achieve that as well. We have a little bit of buying interest here. Hopefully that subsides and the sellers go ahead and push through. Like to see some price acceleration like we had here. That would be sweet. Come on, bears. Trade is trying to move in favor. Find support at my entrance. There's no structure there, so keep moving. Now we've pulled back below this little structure area here, which is encouraging. See if price continues on downward and makes a new structure low. That would be my expectation. Yes, the strength was due to news. Yeah, the life of a day trader is not particularly too interesting. Only during the times that we're here at the market. Other than that, that's why I don't sit here all day, because it will probably drive you crazy. Come on, bears. Pardon if you hear some noise. There's my landscapers are here cutting my grass and stuff outside. They're right next to the window. Come on, bears. Let's see. You opened the door. Technically stops you up. Right, that decision candle. Rotation candle equals a candle that closes above or below. The decision candle equals a candle that closes above or below the previous candle. Yes. Yes, like this right here. It's a major decision candle. Okay, this would have been the perfect entrance right here. Okay. Now, I'm not in a position to remove my risk completely because I don't have enough room. I don't want to give this trade some room. So what I'm going to do is I'm going to remove some of that risk to just above my swing, because I should not get price come back to that area if my expectations are correct. Okay. Now once price gets to the 127 extension, I'm going to draw a fib and lock in to just above the 382. Okay. I got to be patient here. I got to understand that price may find some support here, but if I'm right here, price should not find a tremendous amount of support, and I'm giving my trade still a little bit of room to work out. I apologize for the dog barking. She likes to try to eat anybody that, or she hears or sees anything outside. She thinks she's Cujo, I think. I don't know if you guys are old like me and remember Cujo. Come on, bears. Continue. No buyers here. Let's go. Uh-oh. Yeah. Come on. Again. No. Come on, bears. See, these are the things from a bar by bar perspective that can drive you a little bit insane. You know, how is it that we get another huge decision, rotation to sell, strong candle, and the next candle completely opposes it? Those are things that don't make much sense, but they happen. What tells me that there's enough sellers here that can still drive price lower. And I'm hoping that they do, and that they're listening to me right now, because I'm tired of losing. Ah, crap. Now I can sit here, take entrances, and have them go 10, 15 points in favor and start taking profits and make up my losses for the day. But I'm not following my trade plan. I'm not following the things that long term are going to give me that profitability that I've enjoyed and have. So I can't start trying to get on some sort of recovery mission and start taking scalps because my risk reward started being altered, because I'm still risking the same amount of capital for that short gain. So I'm trading at an adverse risk reward profile for my trades, and that's not smart trading. That's not the kind of trading a professional does. I'm not taking anything away from the scalpers. There's a lot of scalpers out there that make a tremendous amount of points, but they're trading at they're forcing themselves to be very highly accurate on their entrances for them to sustain long-term profitability. That just doesn't make sense for me. I'm hoping here that our analysis is still correct and that price didn't have enough orders filled to continue going lower, so they're coming back to take some of those, and then we get another rotation here, and that we fulfill that expectation of the new structure low. The price is coming back to this little structure area here. Can't be this unlucky twice, huh? Jeez. Come on, Bears. One of the things that we can evaluate, kind of give us a little bit of understanding, although not completely concrete, is comparing this correction to this one. We can see that this one appears to be more labored, and this one was swifter. So let's see if we can get the rotation that we're looking for here and the continuation that we need to get off the pain train again. I think it's CUJO, Cujo, or CUGO. It's a vicious Saint Bernard that got bit by I think a bat on his nose, and he turned into this monster dog. Very old movie. Saw it when I was a kid. Didn't like my dog very much for a while after that. Now we are deeper than I would have expected the bulls to have gotten here. I'm not going to take my stop and move it back above to where it was, because I am following my rules. My rules say that on the Tesla structure I get to a break even. I did not have room to a break even, so I move it to just above structure. Structure's at 86, this is 87. I think I am going to move it though, however, just above the 50 fib. A couple of points above the 50 fib, which is 90, 92. Just to give it a little bit of room. We need the bears to come in here as aggressive as they did in the last swing. Where are we on the correction of this swing? We're at the 78.6. So we definitely need to see something around here. Let me get rid of this. Yep, looks like a complex correction. We definitely don't want price to make a new structure high in the short term, as that will probably take me out. Looks like a W. Yeah, it is a W, but there's no pattern here. I have a hard time understanding the kind of strength and volume we had here to this contrast. Don't like it at all. Weak ass bears. We are in this little area of structure here. Price is trying to react to it. Bears are trying to come in. I'm gonna step away for a minute. I'm gonna relieve my bladder, and hopefully I'll be in a better position when I come back. Well, I was supposed to be in a better position when I got back, not a worse one. Come on, Bears. Don't do it to me again. Let's hope that was a Hail Mary bull pass. That last candle. Sorry things are not working out the way you guys expected and I hoped, but we can't pre-plan the outcome here. We can only take the setups that we see based on our analysis and process. We're about to be taken out here. And it's almost close to quitting time. So I'll stay on and manage this trade if I do survive. If I do get taken out, we'll cut the broadcast and so that it's not too long. And we'll do this another day and hopefully we'll find a profitable day soon. Okay, that's that. All right, guys. We took one break even and 2 losses. That's the way this cookie crumbled today. And what's the method? What's the method of trading? What kind of question is that? I missed a pip for the structure analysis and expectation. It looks like it works better for the days where the significant trend during the times that there are ranges or moving significantly. Right? No, not really. I mean, we had an expectation failure here. We had price come down here, make a new structure low. We had price made a lower high, expectation a new structure low. That did not happen. Now we're in a deep correction. For our expectation to become invalid, it would have to close above this. So although price closed and made a new structure high here, if you look at my entrances, I got taken out here by a little bit, but it went in favor. This same thing, it went in favor. This particular situation was the one that should have progressed after this. It didn't. So this was the one that I took impulsively. I knew my risk was greater than I wanted it to be. I still gave it the room that it needed to some extent. On the test of this, I followed the rules, so I don't believe that I broke any rules or traded against any expectation. However, I was a victim of, got taken out here by a few points and then very quickly moved in favor. I didn't take the long here as I didn't like this, so I read that right, and then the news pushed price lower, speaking. So after this, on the short-term structure, in line with this much strength, I took that short, and although it wasn't back to the 382, I still stand by it, and price produced a very weak new structure low in the short term, but then corrected, and I mean after this it shouldn't have had any problem moving downward, and now the bulls have taken hold of this area again. The expectation is still a new structure low. If you look at it from a grand scheme of things, our expectation here was for mid-range pullback to a slightly deep pullback on this new structure low, which puts the correction somewhere in this general area. But I did not want to risk more than I was prepared to lose on that particular case. So it's not pretty every single time. Sometimes we make decisions based on what we have, and sometimes that information usually works out. Now over the last 3 days it hasn't worked out very well, but as you all know, and you have seen from my trading that it works out, in your own trading that it works out pretty damn good. But not every trade is going to be a winner, and sometimes you string some losses and you can't get all worked up when you do. You just gotta come back, do your post-mortem. What was the expectation? What was the trade? Did I take the rotation? Yes, okay. Did I manage it correctly? Yes, okay, no problem. Did I take the expectation here? Yes. Did I take the rotation? Yes. No problem. Okay. Here. This one was a little borderline. I didn't wait for price to come to at least a 382. Okay. So this one was a very aggressive entry. I pointed that out when I took it. And this one was the one that, I would have expected this over this. This was an expectation failure. This was an expectation that played out. It's just I didn't have much room for my entry to where I managed the trade, the way I managed the trade. So that's that. So it is what it is, I was too aggressive on this management, followed my rules. The information that we had at the time called for that type of aggressive management because price had consistently tried to come in. Okay, we had another rotation candle here to the upside, so we had to protect the trade. Okay, we got taken out, followed the rules, no problem. Here, followed the expectation, expectation failed, no problem. Here, aggressive. So this is the only trade that I would have said, okay, this one was probably a little too aggressive. However, if you look at the order flow and the price action, this is a trade that should have worked out very nicely. It just wasn't in the cards. Okay? So that's about it. I don't want to make this too long. We'll do this again in the near future, probably next week sometime. And I'll see about getting it posted. Okay? All right. Take care, guys. Let me stop.